Hello class, this is Brian from financialtrainingschool.com and welcome to BO105, Initial Newbie Strategy. So just a precaution before we start, strategies are not the same as systems. Systems have to be followed to the letter exactly as stated or to be used exactly when instructed. Like for example, you have step A, then step B, step C, and then you make your trade. So you have to have your conditions lined up exactly as it is stated in the system before you make your trade. Strategies are not like systems. Strategies are like game plans. They help guide you or they aid you while you're trading. It's like a guideline type thing. It's not rules, it's guidelines. And this isn't foolproof because you need to watch to see how the chart sets up based on the strategy, and then you watch to see the conditions. If it works, then you might take a trade or you might not take the trade. So it's more of a guideline. It doesn't tell you take the trade right now. You have to watch it, see what you do, and then you do it. That's why most of the things I teach in this series will be strategies. I rarely cover systems. When I do, I will tell you it's a system and you need to follow it exactly like that. Otherwise, with strategies, you just treat it as guidelines to help you. And this episode will be covering my initial newbie strategy because this is what I started off with when I started trading binary options back in December 2010. So this is before I learned all the other complicated stuff. And this is why this is called the initial newbie strategy, because this strategy is on all my charts. If you look at any of my trades on my trading journal, on Financial Trading Journal, all my trades that I post always have the initial newbie strategy in the background. And then basically from this point onwards, every lesson from here on out is going to be used as an additional tool to complement the initial newbie strategy, because this is simple, so it stays in the background. Then from this point onwards, any lesson that I teach, you can use it in addition to the newbie strategy, or you can use them individually. However you use them, it's up to you, because these are guidelines. You can just keep adding lines onto the guidelines, and you have multiple guides or multiple aids. It's not like a system where you might be overwhelmed by, you need to have this line up with another thing to line up, and then it just gets overwhelming with so many things have to line up before you make a trade. Guidelines it's more relaxed. And the thing with these lessons is that the reason why I'm restructuring the How I Trade Binary Options series into the Financial Trading School series is because I didn't learn this stuff overnight, and the reason why I'm doing this here in particular is because I didn't structure the lessons in the How I Trade Binary Options series properly. That's why I'm redoing it here in the Financial Trading School series, so that hopefully it's in the right order, and I'm doing like the same as the school style. So you have first year, second year, third year, fourth year courses. That's why you have 100, 200, 300, 400 series. And that way it's easier for me to add episodes in, rather than before it's just episode 1 to 24 or up to whatever. It's harder to add newbie lessons onto the end because now it's just all disoriented. But anyways, this is hopefully going to be easier to present my thoughts and present it to you in an easy to learn fashion. So I'm just going to get started with the strategy now. This is what you need for the strategy to work. These are all basic indicators that every charting platform should have. You're using a 13 exponential moving average, EMA, and a 20 SMA, simple moving average, plus a 26 EMA, exponential moving average. The colors on the screen are the colors that I use in my charts. You can color code them however you like on your own charts. You can use black, blue, green, whatever you want, up to you. And then the last one is a 52 Bollinger Band. The 50 is the simple moving average, and the 2 is the standard deviations. And this strategy was originally adapted from Dog's thread on Hot Stock Market. I will have a reference link in the description below to link you to his original thread. And basically, SMAs and EMAs are typically used to help determine the trend changes, and or if it's ranging. So previously in the other episode that I did in the How I Trade Binary Options series, I would just show this on the chart. I'm not going to bother with that. That's a waste of time. You can all add the indicators yourself on the charting platform, and you can see the other episodes in the general trading series where I show you how to use each platform. So it will all be inside there for the instructions on how to add the indicators. So here for this instructions, this is how you use this strategy. Trends are determined if the MAs are parallel. So either the SMAs and the EMAs, if they're all parallel going in one direction, then it's a trend. Otherwise, it's a range if the MAs are crossing. So it goes, one goes up, the other one goes down, because the shorter and longer time frames are conflicting. So it's ranging. It's not in a single direction. And how you spot this is when there's a trend change. Typically, the 13 EMA will cross the 20 SMA, either up or down. That determines the trend change is going up or down. And typically what I've noticed, this is my own modification, I guess, is the 26 EMA usually crosses the 20 SMA before the 13 EMA. So you can either trade here or wait for the 13 EMA for confirmation and then enter. It's up to you, but these are all guidelines. Just put it on your chart, then see what you notice, and then trade accordingly. As for the Bollinger Bands, they're typically used as boundaries, because once it goes outside the boundary, it's bound to come back inside. And then, as I mentioned before, the center of the Bollinger Bands usually contains an SMA with the given period, and then the outside are the standard deviations. So you have the 50 SMA in the middle, that's what the 50 stands for, and then 2 is the standard deviation. So 2 standard deviations away from the 50 SMA, that gives you the boundary of how price can move based on the previous action. And it's gonna, if it's going outside, it's gonna come back inside eventually, because then the boundary would be screwed up. And just a few precautions when you trade these. Moving averages are lagging indicators because they rely on historical data to form. If the next bar is a big red bar, then obviously it's going to drag down the average, because if you think of like a class average, for example, you have 20 students, they have an average of 60%. If another student has an 80%, it's going to drag up the average. If another student has a 20%, meaning they failed, then it's going to drag down the average. Same thing here with the charts. If you have a candle below, it's going to drag it down. If you have a candle above the MA, it's going to drag it up. Simple. So if you have a really big bar, which I will explain in the charts, then it's going to screw up the average really badly. And that may cause a fake cross, because it's not a real cross. It might just be a news release or something, and then that causes the MA to change, and then it might make you enter a wrong trade. So you got to be careful of that. So when you're trading this, like I mentioned, load it on your chart and then observe. And you can't backtest this. Backtesting doesn't work. I have a video in the general trading series on backtesting. It does not work here. MAs look different between the time they form and the time they're forming. And in hindsight, they look like they formed properly, but then when you're going forward, it may not always look like that. Because if you observe a real-time charting platform, you can see the moving averages move up and down according to the candlestick. So depending on how it is, it may or may not work out. So anyways, let's get started with the examples. There's about 14 minutes worth of examples. I'm going to go through about 6 to 8 charts showing my trades from my newbie days, because this is when I only use that strategy. So this is back then. I don't focus entirely on this stuff now. Now it's mainly price action, but that will be covered in the 200 series courses. So let's get started on that. So this is the Australian USD on December 23rd, 2010. Yes, 2010. So let's see. This one, I'm going to assume, so this one it crossed there. I don't know why I waited that long. I'm assuming this was a Bollinger bounce. That's what I played on, because this is near the Bollinger Band. You could have see this one. It breaks out of the Bollinger Band and it comes back inside. Not always. It could just keep going upwards and hug it on the way up, but you have to watch it. So I'm assuming that's a pin bar there. So that would be. If I had PA back in December, I probably would have placed a lot more trades on this chart. So anyways, that's a Bollinger bounce. See, comes out, goes back inside, touches, bounces there. Every touch, it basically bounces. So this one came outside, and I noticed that, so I traded it and bounced up. But these are dangerous because you never know, because this is already, it dropped down, so it's already trending downward, so you never know. It could be continuing the trend. So I guess I got lucky when I traded these last year. Bollinger bounce again, and this is, looking at it now, this is a downward channel, and this is a bounce of that. Next, this is Euro JPY on December 23rd again. That one was, first one is me expecting it to cross soon. So that's an expectation cross. Shouldn't do those. I would wait for confirmation. Wait for confirmation. This one happens. So then this one I call there because it crosses. The 26 crossed a long time ago, but the 20 crossed now. So it crosses on the hour bar. Then I probably wait for a confirmation just in case, and then I enter. And see, this is what I mean by red bar drags it down. This is a range or upward channel. Then here you have this big 1 minute. These are 5-minute charts. So this is a one big ass bar. And how many pips is that? Let's see. That is 17 down to, that's 50 pips. It's a 50 pip candle. So a 50 pip drop is going to drag this down. That's why these things are sloping downward so much. But look, it's not continuing to trend down. It starts getting ranging over here. So you have to be careful when you have a big thing like that. It will skew your results. See though, it's about to cross. It did cross, but given this big bar, it crosses a lot more than you would expect it to. So you'd be like put here, and you would still win. You would still win because the close is there. But if you place a put, say down here, you're expecting it to continue this way, and it doesn't happen, then you're out. So here we have the 13 EMA crossing the 20. So the 26 crossed a long time ago over there, and then you're waiting for this cross here. Enter. Same thing here. The 26 crossed on that candle. But then, since it was starting to drop big, anyways, the blue, which is the 13 EMA, I mean, crosses down, and you place a trade there, and then you get it. This is Euro JPY December 26, 1 minute chart. There is an upward channel, but this here, it crosses. And here's a cross. Here's one where they use the 26 EMA. If it has like this type of shape, like a flag or like an arc kind of thing, then, and given the Bollinger Band situation too, it's outside and it's going to come back inside. This cross here represents this area. If you put right there, that would be better than these entries, but they would both still win. But you have to test it out, see what you like. But these ones are for the 13 EMA cross. So it crossed, goes back up a little bit. I enter on the pullbacks, and then I win. This is a Bollinger Band play, right there like that. This one hits up. I'm betting on a bounce. Starts getting choppy. So if you wanted to place a hedge on yourself, you could place a call right there, because this is starting to form the beginning of that lightning bolt shape that is going to start going upwards. But I end up in the money, luckily. I'm going to say luckily a lot for these newbie strategies, because I didn't know shit last year. All I knew was this strategy, nothing else. That's why when I look back at these charts, I'm like, how was I so stubborn and stupid? But at least you guys have me now, because I'm teaching you the basics. So there's a cross, and then I enter on the pullback, and then I win. And this is, if you look at it, it's actually an upward channel. If you draw a line connecting here to here, and a line connecting these tops here, that's an upward channel. This is Euro USD, and I'm using the 1 minute chart this time. So as I mentioned previously, it doesn't matter, like you can put this on any time frame you want. I typically use 1 minute or 5 minute. It's entirely up to you. So this is the 1 minute chart. This is a big red, and then I place a put. After it crosses, the 20 dash line is a 20 SMA. It's just dash so that I can see it better. So it crosses, and that ends up winning. This is an anticipation trade. Here I'm anticipating it to cross. It doesn't end up crossing, or actually does it? Well, it crosses later on at about the same level anyways, so I'm not, this chart doesn't go up to the 4 p.m. expiry, so I don't know what happened there. But this is anticipation. I don't advise anticipation. Wait for confirmation when you're using these crosses. Usually the cross is too late, but depending on what expiry you're trading, which now we have a lot more different expiries than we did back last year, so you can, it's flexible now. Here is a cross on the 1 minute chart again, on Euro JPY, crosses down. If you wanted to use the 26 EMA cross, it crossed right there, so you'd be trading on this, on either that pin bar or that green candle. And I drew a downward trend line, so that's good. But I entered there after the cross, which is after confirmation. Here is the anticipation cross again. It didn't cross yet, but it's arching upwards, so it's getting ready to cross. I anticipate it, so I get in early, and then it gets choppy. Here is anticipation again, which I lucked out on, but you shouldn't do this. I'm just showing these examples of what you could be doing, and I'm advising you not to do them. This is Euro USD again on December 29th, and there are crosses here, so I'm trading, and that's an anticipation cross again. So there's a downtrend. I'm hoping it goes down some more, so I end up losing that one, but this one is good. So this one, it crosses, they both cross, so I enter on the first one anticipating a cross. I re-enter again, I'm guessing because I had these positions, so I need to hedge my position to get more. So then I enter a second one, and this is Australian USD January 6th. Shown this chart previously. This is showing the 26 EMA crossing, all those green circles. Well, this is what they mean. This is the 26 EMA cross. So cross, I placed call there. This cross is for the 13 EMA. This cross, so first trades and all these things will be for the 26 EMA cross. Then the second trade is for the 13 EMA cross. So 26, 13, 26. So this is near the top put. Then this one, it crosses second put for the 13. Here's for the 13. I mean the 26 near the bottom, right? See, the 26 gives you a better entry, but it's not as safe because you have to wait a while for the 13 to cross. And 13 crosses there. I don't know where the second trade is, but anyways, this is pretty good because this is at the low and this is at the high of the same hour, so that's good. So this is 26 EMA cross there, 13 EMA cross there, and this is anticipation cross of the 13 EMA. Here is for the same thing, 26 EMA cross there, 13 EMA cross there, 13 EMA cross there. These are Bollinger plays with the pin bars and the lows and all that stuff and the downtrend, but I'm guessing under my newbie mentality, this is what I did for Bollinger Bands. When it comes outside, you trade it back inside, given the right conditions, which you have to observe. Anticipation cross there. This would have been a Bollinger Band here. See, this is, sometimes it does this, it hugs the Bollinger Band on the way up, so you're not really sure if it's going to go down or what's going to happen. See here, it goes, technically there's a pin bar there, and then it reverses. Then here, it reverses immediately. This one reverses immediately too. This one, it touches, keep touching, then finally starts reversing, and then I enter. Here is, I wait for it to get back inside, and then I place the trade. So that's all the examples for this video. So that's it. I'm done teaching this strategy. Hopefully that should be a good start for your own trading journey. And as usual, my 3 recommended brokers are 24 Options, Bank to Browning, and Trade Rush. And don't forget, I always have my free tutoring promo running. So make sure you sign up for the brokers through my links below in the description. You can view the full details on the tutoring promo on my site, which is also below. I hope you guys enjoyed this video, and I will see you guys next time.